Welcome to this investor-focused deep dive. Today, we're looking at DeLonghi SPA. You probably know them, the Italian appliance company, especially famous for those really stylish espresso machines.
That's right. And our goal here is to really give you that investor's perspective on DeLonghi. We'll dig into their history, their brands, how they actually make money, their financial strategy, and, the risks involved too.
It's quite a journey they've been on. Started, way back in 1902, as just a small workshop making industrial parts in Italy.
Yeah, a really humble beginning. They formally incorporated in 1950, initially focusing, I believe, on things like portable heaters and air conditioners, before really branching out into all sorts of small domestic appliances.
So quite the transformation over the decades.
Absolutely. From those industrial roots to being a major global player, now they're in, over 120 markets, employing more than 10,000 people, still family-led, which is interesting.
And listed on the Milan Stock Exchange since 2001.
Correct. So a public company, but with that long-term family influence potentially still there.
And that global reach, it's built on a really interesting portfolio of brands, right? Not just the DeLonghi name itself, they made some smart acquisition.
Exactly. The DeLonghi brand itself really took off in the 70s, establishing them, especially in coffee machines. But then 2001 was huge. That's when they bought Kenwood.
Ah, the British kitchen appliance maker. Known for those iconic stand mixers, the Kenwood Chef.
Precisely. A classic. And that deal wasn't just about the brand. It gave them crucial manufacturing capabilities in China, too.
Right. Smart move. Then fast forward a bit to 2012, and they did that deal with Procter & Gamble for the Braun license.
Yes, a licensing deal for small appliances under the Braun name. That was a pretty significant investment, about $50 million upfront, but for perpetual rights.
So they get the brand recognition of Braun, known for that sort of German engineering feel.
Exactly. It complemented their own Italian design focus quite well, you could argue. And then more recently, 2020, another big one, Capital Brands.
The NutriBullet people. And Magic Bullet, too. That cost them around, $420 million?
Yeah, about that. And that was a major push into food prep, especially personal blenders, and really boosted their U.S. presence. It actually made the U.S. their single biggest market after that.
Interesting strategic shift. So it really strengthened their hand in North America.
Definitely. Different market, different consumer habits compared to Europe. And we shouldn't forget Ariade, either an Italian innovative small appliance brand that actually came along with the Kenwood acquisition back in '01.
Okay, got it. So the core lineup is DeLonghi, Kenwood, Braun under license, NutriBullet, and Ariade, covering coffee, kitchen, other bits and pieces.
That's the stable, yeah, a multi-brand approach.
Okay, so we understand the brands. Let's talk about the actual business model. How does it all work? It's more than just selling appliances, surely.
Well, at its core, yes, it's designing and manufacturing small domestic appliances. The big focus areas are coffee, kitchen prep, and increasingly home comfort. But their differentiator is really that blend of quality, innovation, and that signature Italian design.
That style element is pretty prominent.
Yeah.
And production isn't just in Italy.
No, it's global. A lot of the high-level engineering and design still happens in Italy, but manufacturing is spread out. China, as we mentioned, via Kenwood, but also Romania and Italy itself. It's about balancing cost and quality control.
And getting these to customers, how does distribution work?
It's pretty broad. They use traditional retail channels worldwide, big box stores, department stores, specialist shops. But crucially, they've also been investing heavily in their own direct-to-consumer online sales. E-commerce is big for them now.
Right, like everyone else, that shift online has accelerated.
Hugely. And that multi-brand strategy we talked about, that lets them hit different price points in different categories effectively. You've got the premium DeLonghi coffee machines, maybe more mid-range Kenwood mixers, other things.
But coffee is really the heart of it, revenue-wise.
Oh, yeah. Coffee, especially those home espresso machines, that's around half their total revenue. They're the world leader in that specific segment. It's their engine room.
Let's zoom in on the products then. Coffee machines, the crown jewel, as you put it. What makes them stand out?
Well, they have a really wide range. Everything from, the manual pump machines for people who like the ritual to the super popular, fully automatic bean-to-cup machines. Press a button, get an espresso.
Super convenient.
Exactly. And they also make the Nespresso capsule machines under license from Nestlé, which are obviously huge. Their leadership really taps into that trend of people wanting better coffee at home.
And they win design awards too, right? Like for the Artista series.
They do. Design is definitely part of the appeal. And look at their marketing, getting Brad Pitt as a brand ambassador. That screams premium, right? They even used him to promote their newer cold brew machines.
Yeah, that definitely reinforces the high-end image. What about Kenwood and Braun in the kitchen? How do they stack up?
Kenwood is a real workhorse brand for kitchen tasks, mixers, food processors, blenders, kettles, toasters. Braun also has a strong presence in those areas. Together, they offer a really comprehensive lineup, competing head-to-head with rivals like, say, KitchenAid.
And NutriBullet obviously brought that personal blender dominance.
Absolutely. It carved out that specific niche, quick, single-serve smoothies. They claim over 80 million customers globally, which is massive.
Yeah.
So within kitchen prep, they cover the spectrum from serious baking with Kenwood to health-focused blending with NutriBullet.
Okay. And the home comfort side. Maybe not as glamorous, but still important.
Definitely still important.
Yeah.
It's where DeLonghi started with heaters and portable air conditioners. The Pinguino line is pretty well known. They also do dehumidifiers, irons. Sales tend to be steadier, maybe more seasonal.
Quality matters there too, I suppose.
Yes, they highlight things like getting certifications for dehumidifiers, being asthma and allergy friendly. It shows attention to detail even in those categories.
So, summing up their market position, where do they sit?
Generally, it's that mid to premium space. They use the Italian design, the brand heritage DeLonghi, Braun, Kenwood, and the reputation for reliability to justify those price points. It's very much about premiumization.
Pushing towards the higher end.
Exactly. And that global espresso market, estimated around $4 billion a year, that's a massive base for them to build on. It's a strong growth engine.
Right. Okay, let's pivot to the financials. How have they performed over the last, say, 5 to 10 years? What do the numbers show?
Well, the big picture is pretty solid revenue growth. Over that kind of time frame, they've roughly doubled their turnover, went from about $1.6 billion back in 2014 to around $3.16 billion in 2022.
Wow. Doubling revenue.
Yeah, they even picked a bit higher in 2021, hitting $3.22 billion. That was definitely boosted by the whole pandemic, work from home, making coffee at home boom.
Sure, that makes sense.
So you're looking at a mid to high single-digit compound annual growth rate overall. That's driven by organic demand, but also helped significantly by acquisitions like NutriBullet, which added, maybe 250, 300 million in annual sales right there.
And profitability, has that kept up?
Generally, yes. Pretty healthy for this kind of industry.
Yeah.
Adjusted EBITDA margins have been hovering around, say, 16% in good years like 2021. That was over €500 million in EBITDA.
That's substantial.
It is. Net profit margins typically in the 9–10% range. And as a result, earnings per share, that's basically doubled over the last decade, too. We're talking over €220 on a trailing 12-month basis recently.
And what about cash flow? Free cash flow is always key for investors.
Yeah, that's a real strength for DeLonghi. They're very good at generating free cash flow. Consistently strong. For instance, in 2023, they generated around $436 million before dividends.
Okay.
And their guidance for 2024 was in a similar ballpark, around $416 million. It shows really high conversion of their operating profit, their EBITDA, into actual cash, often like 70–80% conversion.
That gives them a lot of flexibility.
A huge amount. For reinvesting, paying dividends, handling debt. The market seems to notice this too, looking at their price to free cash flow multiple, which is around 10 or 11 times.
You mentioned 2021 was a peak.
Right.
What caused the slight dip in 2022? Just normalization?
Pretty much. A bit of a speed bump. Revenue dipped slightly and margins got squeezed. It was a combination of factors, demand normalizing after the COVID surge, but also rising costs, inflation hit raw materials, shipping, everything.
Right. Supply chain issues were everywhere then.
Exactly. But management responded, focused on cost controls, and by the second half of 2023, things were looking better, margins improved, and they saw high single-digit organic growth again, especially in nutrition and food prep.
So they managed to navigate that. Overall picture, steady growth, good profits, strong cash flow. How does the balance sheet look? Lots of debt.
Actually, no. Historically, they've kept leverage pretty low. Debt to equity is usually quite conservative. Interest coverage is very high. Often they're actually in a net cash position, meaning more cash than debt.
Very solid foundation, though.
Very solid. Give them a lot of resilience and options.
Which leads nicely into how they use that cash. What's their capital allocation strategy?
It seems pretty clear. Priority one is reinvesting in the business for growth. That means R&D for new products, like we mentioned, the cold brew espresso machines are an example. And it also means strategic M&A.
Mergers and acquisitions. We've touched on Kenwood and NutriBullet. Any other key deals shaping them?
Yes, especially recently in the professional coffee space. They bought Everseas, a Swiss maker of high-end automatic espresso machines, fully acquiring them in 2021 after taking an initial stake.
Okay, moving beyond just home use.
Exactly. And then late 2023, they took a big stake, 41% in La Marzocco.
Ah, another iconic Italian espresso brand known for very high-end, almost artisanal machines.
That's the one. They've effectively combined La Marzocco with Everseas to create this professional coffee machine hub where they now have control about 61% of the combined entity. It's a clear signal they want to be a major player in that commercial, high-margin coffee segment.
Interesting. And they've done these deals without taking on huge amounts of debt.
Seems so. Disciplined use of cash, maybe some moderate debt, but keeping that balance sheet strong.
Okay, so reinvestment and M&A for growth. What about returning cash to shareholders?
That's the other key part. They're very consistent dividend payers. And actually, they just announced a huge dividend hike for 2025, up 87% based on strong 2024 results.
Wow, 87%. That's a statement of confidence.
It really is. The current annual dividend is 1.25 per share, which translates to a pretty attractive yield, maybe around 4.5% at recent prices.
And they've grown the dividend over time.
Yes, there was another jump back in 2021 as well. Share buybacks are less common, though, probably because the family already owns a large chunk, around 70%.
Right, less need for buybacks to boost EPS when ownership is concentrated.
Exactly. They did do a small 6.7 million buyback recently, but that seemed more about offsetting stock grants or just helping liquidity a bit.
So the balance sheet management is conservative, low leverage, often net cash positive recently at around $643 million.
Yeah, very comfortable position.
It sounds like a pretty shareholder-friendly approach overall.
Yeah.
Invest for growth, make smart acquisitions, and return the excess cash via rising dividends.
I think that's a fair summary. And that family ownership probably encourages that longer-term view on value creation.
Okay, let's switch gears to the competitive environment. You mentioned it's tough out there.
Oh, it is. The small appliance market is incredibly crowded. Especially coffee and kitchen, you've got huge global pull.
Like who? Who are the main rivals?
Well, there's Group SEB out of France. They own brands like Krups, Tefal, Moulinex. You've got Breville, which is marketed as Sage in some places. JURA, the Swiss high-end coffee machine maker. Philips with Seiko and Senseo.
Keurig Dr. Pepper in the U.S., obviously huge in pods.
Definitely. Then Hamilton Beach, Cuisinart, which is part of Conair. Even bigger appliance companies like Electrolux dip into small appliances.
So a lot of names fighting for that countertop space.
Absolutely. In North America specifically, the espresso market has DeLonghi, Breville, Illy, and others all competing hard. In coffee more broadly, you've got Breville strong in semi-automatics, JURA and the luxury super automatics, Krups from Seb, Keurig dominating pods.
And in kitchen appliances, beyond coffee.
They're up against giants like Whirlpool's KitchenAid brand, Bosch and Siemens, Panasonic, Group SEB again. And in home comfort or entry-level kitchen stuff, you might see Electrolux or Chinese giants like Midea.
It's interesting, you mentioned partnerships earlier, like with Nespresso, so sometimes they're partners and competitors at the same time.
Yeah, that happens. DeLonghi and Breville both make machines for Nespresso, so they compete for Nestlé's business, but also compete with their own branded machines against each other in the stores. It's complex.
Wasn't DeLonghi interested in buying WMF a while back?
They were, yes. That shows the kind of consolidation and competition happening. They were reportedly up against EB and Electrolux for that one, as EB ultimately won it.
So given all that competition, what's DeLonghi's edge? Why do people choose them?
Their real strength is in coffee, particularly espresso. The brand is just so strongly associated with it. That specialization helps, especially in the premium end where margins are better.
They can command a higher price based on brand and features.
To some extent, yes, though price competition is fierce in the more basic commoditized segments. In premium espresso, it's more about features, design, reliability, and that brand reputation.
What about threats from newcomers? Are there disrupted players?
Always a possibility. You see niche brands pop up, like Fellow focusing on manual coffee brewing gear. And there's always the looming potential of large Chinese manufacturers like Xiaomi or Midea becoming more aggressive globally with lower cost, feature-rich appliances.
So the moat isn't impenetrable.
No moat really is. Theirs comes from the well-known brands and continuous product development, but they absolutely need to keep innovating to stay relevant and ahead of the pack.
Which brings us to their growth strategy.
Yeah.
Looking ahead, where do they see the opportunities? You mentioned premiumization.
That's a huge pillar, especially in coffee. Investing in La Marzocco and Everseas is all about capturing that very high-end professional market. We're talking machines costing thousands of dollars.
Right, cafes, restaurants, Serious home users.
Exactly. And even in their consumer lines, they're pushing the higher spec fully automatic machines like the Aletta and Dynamica series, often with smart tech integration. That fully automatic segment is apparently their fastest growing category, double-digit growth.
And using Brad Pitt helps sell that premium image.
Absolutely. It's all geared towards lifting the average selling price and boosting margins.
What about growing geographically? Where are they focusing?
The US is a big one. There's still a significant shift happening there towards espresso and specialty coffee culture, away from traditional drip coffee. The NutriBullet deal really helped their distribution and presence there, making it their largest market. They've opened a new US HQ, increased marketing spend.
Makes sense. Anywhere else?
Asia Pacific is another key growth region. They've done partnerships like one in India with Orient Electric, generally targeting the growing middle class and emerging economies who aspire to own these kinds of brands.
And we talked about e-commerce. That's a core part of the strategy, too.
Definitely. Direct-to-consumer DTC is vital. The pandemic turbocharged it, and they've built up their internal teams and brand websites. Selling direct means better connection with the customer, more control over pricing and how the brand is presented.
And their products are quite visual, probably work well on social media.
Yeah, you can imagine latte art competitions and things like that driving engagement online.
Innovation remains key, too, you said. What kinds of things are they working on?
Things like multi-beverage machines, espresso plus cold brew in one unit. Smarter kitchen machines, maybe app-connected mixers from Kenwood. Tapping into health trends with NutriBullet, sustainability angles with bronze efficiency perhaps. It's about adding features that make people want to upgrade. Quieter grinders, better user interfaces.
When leveraging the whole brand portfolio, cross-selling.
That's got to be part of it. If someone trusts Kenwood, maybe they'll try a DeLonghi coffee machine or vice versa. Especially useful when entering new markets where one brand might be better known than another.
And their guidance for 2024 seemed pretty bullish.
Yeah, they guided for 9-11% revenue growth, including the contribution from that new professional coffee hub. Shows confidence, particularly in coffee, and a rebound in kitchen segment.
So the strategy is clear. Go premium, expand geographically, boost digital sales, keep innovating, and leverage the brands.
That sums it up pretty well. Focus on the core strengths, especially coffee and kitchen.
Okay, let's talk valuation then. How does the market view DeLonghi right now? What are the metrics saying?
Well, the stock price has been around €29 lately. That gives them a market cap of about 4.4 billion and an enterprise value slightly lower, maybe 4.2 billion because of their net cash position.
And the multiples, PE ratio, things like that.
The price to earnings ratio is running around 14 times trailing earnings, maybe 13 times forward estimates. EV to EBITDA is roughly 7.8x. EV to sales is about 1.2x.
What does that tell you compared to peers or history?
It suggests the market sees them as a pretty stable, moderately growing company, not a high-flying growth stock, but solid. These multiples are broadly in line with other appliance and consumer durable companies.
You mentioned the stock peaked higher back in 2021.
It did, yeah. It got up towards €40 a share during that home appliance boom. The PE was likely closer to 20x back then. It's interesting that the founding family actually sold a portion of their stake around 35, near those highs.
So the stock is down maybe 25% from that peak. The current valuation seems more reasonable.
I'd say reasonable is a good word for it relative to peers. Not obviously cheap, not expensive.
But that dividend yield we talked about, around
Sure.
4.5%, that's quite attractive.
It is. That provides a nice income stream. The recent huge hike supports the idea that management is confident and willing to return cash. The payout ratio, even after the hike, looks sustainable, maybe around 60% of net profit.
Historically, has the PE ratio fluctuated much?
Yeah, it tends to move in a band, maybe 15-20x PE when things are looking optimistic, and down towards 10-15x when there are concerns about consumer spending or costs like we saw affect them in 2022. So there's definitely some cyclicality reflected in the valuation.
Is there potential for the multiple to go up from here?
Possibly, if they really execute on the growth strategy. Especially if that professional coffee venture with La Marzocco and Everseas proves successful and higher margin, the market might re-rate the stock higher.
Are there any other factors that might justify a slightly better valuation than average?
You could argue the strong balance sheet deserves a bit of a premium. Also, the stability that sometimes comes with significant family ownership, that long-term perspective, and perhaps fewer corporate governance concerns compared to some other Italian-listed companies historically.
Looking at it differently, the earnings yield is around 7%, and the free cash flow yield is near 10%.
Right. Those yields suggest you're getting a decent return on the current price, assuming earnings and cash flow hold up or grow. It looks like a valuation that could be attractive if you believe in their strategy.
Okay, makes sense. Finally then, let's just recap the key risks and then challenges investors need to keep in mind.
Sure. Number one is probably the cyclical nature of demand. These are discretionary items for many people. If the economy slows down, consumers pull back on buying new coffee machines or mixers. It's tied somewhat to housing cycles, too.
Consumer tastes can change too, right?
Absolutely. Trends shift. What if espresso becomes less popular? Or smoothies. They need to constantly innovate and market effectively to stay relevant.
And being global means currency risk.
Big time. A huge chunk of their sales, maybe 75%, is outside the Eurozone, but costs are in various currencies too. A strong euro can hurt reported profits. They probably hedge some of that, but it's unlikely to be perfect protection.
We saw the impact of input costs recently. That remains a risk.
Definitely. Steel, plastics, microchips, freight costs. They're vulnerable if those spike again. And passing those costs on to consumers is tough when competition is so intense.
Competition is going away.
Not at all. Intense global market, risk of rivals launching killer products or just undercutting on price. You could even see tech giants trying to muscle into the smart appliance space more aggressively.
Any other major risks? Regulatory, geopolitical.
Yeah, those are always there for a global company.
Hmm.
Different safety standards, trade rules. Geopolitical events can disrupt supply chains or even lead to reputational issues. There was some criticism over their continued operations in Russia, for instance.
And just the risk that their own plans don't work out. Execution risk.
Exactly. Integrating acquisitions like NutriBullet or making the professional coffee hub successful, scaling up in new markets like the US or Asia. None of that is guaranteed. It requires good execution.
So definitely things for investors to watch.
For sure, it's not risk-free, no investment is. But their track record and financial strength offer some buffer.
Okay, so let's try and wrap this deep dive on DeLonghi SPA up.
Yeah, so we've looked at this Italian family business that really grew into a global powerhouse, especially known for coffee, but also strong in kitchen appliances, thanks to brands like Kenwood, Braun, and NutriBullet.
Right. We covered their history, the brands, the business model focused on quality and design, their pretty strong financial track record with good growth and cash generation.
And their capital allocation smart acquisitions, particularly the recent push into professional coffee, alongside those rising dividends showing commitment to shareholders.
They're clearly a leader in that growing home espresso market, and their strategy seems focused on capitalizing on that through premiumization, expanding globally, and really pushing online sales.
But, as we just discussed, it operates in a very competitive field and faces risks from economic cycles, cost pressures, and shifting consumer habits.
The valuation looks pretty reasonable right now, especially with that dividend yield. But investors definitely need to weigh those risks.
So I suppose you could say DeLonghi offers an interesting mix of stability, given its brands and market position, and potential growth, particularly if the premium coffee strategy pays off. A solid name in the consumer goods space.
Absolutely. Well, hopefully this deep dive has given you some valuable insights into DeLonghi. But, as always, just a reminder, this conversation is purely for informational purposes. It's not investment advice.
Please, do your own research. Consider your own financial situation and risk appetite before making any decisions.
Thanks for tuning in.
Thanks.